So let's see if we can take some of these questions. Let me read to you some of them. Oh, one of the questions, and this is a timely one, is the subscription cost still $12,500? Barry, I don't know where the figure came from, but we have good news for you. It's not $12,500. In fact, you take a few zeros, and actually that gives you the number. If you go to VeraTrade, like we're doing right now, and you say get started now, and if you go to Barbara Rockefeller, there's your prices. So we're looking at Barbara Rockefeller for a bargain of a price of $225 for a year's worth of her insights. I can tell you that in a single day you might have this paid back. I've made over $100 in just one trade on 1 day's worth of suggestions. And we have a special for you. If you were to type, and this is the second bonus that you will receive besides the email with her trading rules, if you type veratrade.com/RTS, that gives you our second special, which is if you place your order within the next few hours, you will get an extra 10% off on the already discounted prices. So that's our way of saying thank you for being with us. But boy, I'm tickled at how much we've been able to cover here. Now let's go to the questions. So Ermelinda Horn writes, the euro is down 178 points. And by the way, this question came about half an hour ago before we went over a lot of this chart, so maybe she no longer has that question. But it says euro dollar is down 178 pips from your 139.11. Would this alter your recommendation to stay long? So
you mean short?
Well, in one of the charts.
Okay. That's a very important question because we kind of skipped over something in the morning report. There's a little warning box right under that top box that says, this is not a trading system. All trade recommendations are made in the afternoon report. See the little box?
I see it right here. You see it there?
There we go. This is an information service, not a trading system. All the trading recommendations are in the afternoon report. So in fact, I'm glad she asked that because it makes me point out that these buy-sell signals that are here are the big picture, big macro, big perspective, and not sensitive to trading needs at all. They're really designed to give you the big picture. That's why I call them big picture. You must not trade on these buy-sell signals on this report. This is only to show you the, I hate to say it again, the big picture. All the trading signals will be in the afternoon reports. I know that sounds cuckoo, but it's possible on a big picture time frame, for the euro to still be trending upwards to 140, 150, 160 while we're busily selling it as traders. You have to hold both ideas in your head at the same time. In this case, what we're talking about is a correction of an uptrend that, I made about $8,000 today on this correction. So I'm very glad that I certainly wasn't believing that we should still be long the euro. However, in the big picture, we definitely want to be long the euro. At least our bias is to believe that the euro will recover at some point after this correction. Now, one of the things I forgot to mention is, and I didn't put it on any of the charts today, but I do sometimes put it on, is that foreign exchange is infested with an insect called the Elliott Wave. And Fibonacci retracements are very, very popular in foreign exchange. And because they are so popular, they become self-fulfilling prophecies. Now, I happen to think that Bob Prechter is a doll. He he liked what I write about him, and he sends me his books, and I'm on very good terms with a lot of Elliott Wave people. But there is nothing automatically destined that every move goes in waves of a particular number, a particular count, and has particular retracements. So I'm not a religious person. I just don't believe in the Elliott Wave religion. However, having said that, retracements almost always can be seen to fit pretty well with the Fibonacci numbers, and I often use them. I often set targets and stops based on them as well. I just don't happen to have any up right at the moment.
Do you see a correlation, talking about other pairs? So right now it so happens that this correction that we're seeing on the euro and on other pairs where the euro is showing weakness, has anything changed, really?
No, nothing actually has changed. All that happened was that the market went overboard selling dollars, and what they're doing now is closing out short positions. They're not buying dollars because suddenly they love us. They're just closing out short positions. It's called position pairing and covering shorts. It's not really an outright enthusiasm for the dollar. It's just less of a distaste for the dollar. And that's really the essence of a correction. And by the way, in my morning report, not the one you've got up here, but the one the day before, yesterday, I did name a Fibonacci retracement, and if memory serves me, it was down around 134 and change. And that was, I believe, the 50% correction of the recent move up from end of August. And that is a very highly likely number to occur. The way you're going to know is you keep reading and you see how many people name that number. And if you're doing your Fibonacci retracement on your chart package a little bit differently, you may have to change the way you're doing it to the way the majority of people are doing it, because, again, the self-fulfilling prophecy aspect of the Fibonacci retracement numbers is very powerful, and just accept it. You have to live with it. It's a fact of life.
Question, the reports, let's say I get them in the afternoon, how quickly would I want to take action? Say, for example, when I see this square and sell, what exactly does that mean that the reader is supposed to, how they're supposed to react after they...
If you look at the header where it says Rockefeller Treasury Services, blah, 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 it says for immediate action and next trading day until 4 p.m. As a practical matter, just because it takes over an hour to produce the darn report, I take the price quotes, and I'm using eSignal, which is a retail trader's venue. It's a good venue. It's not the interbank market. It's a proper retail spot venue. I take the price at 4 o'clock, and there I'm pretty strict. I really do take it at 4 o'clock. It might be 4:01, but hardly ever. I mean, I've got my finger poised on the print button when 4 o'clock rolls around. And I'm very rude to people on the telephone who want to talk to me at exactly 4 o'clock. So I take the price at 4 o'clock, and everybody should have a price that's very, very close to the price I'm showing as the 4 o'clock number. I'm calling it a close, but that's arbitrary. I made that up. That's my close. Nobody else thinks of it as the close. I think of it as the close. And the reason I have to do that, I don't have a choice. I have to do it that way because I'm giving people essentially an hour. I produce the report between 4 and 5. They get the report around 5 o'clock, and they have an hour to 6 o'clock to get ready to execute it. And I want them to do it in that hour because when I label my fills, in other words, where did I get filled, I'm going to take the 6 p.m. number. And that is what eSignal considers to be the open. Now, it is an open. It's the New Zealand open. It's the Auckland open. Not the biggest market on the planet, but it's the first one that opens after New York really, really has closed. So I consider the close to be at 4 p.m. and the open to be at 6 p.m. New York time. And when I do my track record, which I think is on here somewhere, next page, I am considering that that I entered at the open, and the open, of course, will be 2 hours worth of difference between 4 and 6 p.m. Okay, this is good. So just taking we can just take the top entry. I guess that's as good as anything. It shows Australian dollar. We bought it. We bought it at 96.53. Now, if the day before I had said buy at the open, the close would have been some other number. That 96.53 would have been the 6 p.m. open on that date.
On the first
actually the day before, really. But anything that happens after 6 o'clock goes into the next day's data. That is the official e-signal open of the 24-hour day. So even though it happened on 9:30.
And right here you're using one mini contract as the
these are the mini contracts. So on the mini contract, when you make 54 points, that happens to be worth $54. And I'm assuming a starting stake of $25,000, so now you have $25,054. And as you can see, we can take quite a few losses in a row. So each currency is done separately. Each chart is looked at separately. I think you brought up a good point, though, and that is the so-called conditional trades. Mm-hmm. If you could go to one of the standalone currency, this is a good one because it's interesting. Yesterday we went short look at the stuff that's in that peach-colored stuff. We went short at the open. And if you look at any e-signal report, it'll say the pound opened at 6 o'clock last night at 158.91. And this is one way that we can try to get some kind of standardization here so that everybody is on the same page of what is the open and what is the close and what is the high and what is the low and, you know, what are these prices. So the open, according to eSignal, yesterday was 158.91. And we hit our target at 158.46 for a gain of 45 points. Now, we also went short at 157.96, which you'll notice is 50 points under that target on footnote rule 2. And then we closed it out 100 points better at 156.96. Now, what is this footnote rule 2? Okay, if you can scroll down a little bit, this is what we call the runaway move rule. And it's a very simple rule. Sometimes I get my arithmetic wrong, so just learn the darn rule, and then you won't have a problem. Now, I set my stops and my targets to be a function of the current average true range. That's why I like all these bands and channels and things. But sometimes you get a runaway move like we had today. So here, rule number 2 says, to take advantage of a runaway move, keep trading 50 points from the last exit. In this case, it was 50 points. The one where we just took the profit was 50 points under our target, and we were lucky. We made the full 100 points. Mm-hmm. Now, for today, the target I know is 50 points above where I'm telling you to sell on the footnote rule 2. This is so you don't have what's called an opportunity loss, where something moves 300 points in a day and you were stuck with your crappy little 40 points from the average true range. Right. The second rule, which can be useful, is that sometimes you will get, and this is what I think could happen to us overnight and tomorrow. Remember I said the giant bar gives us a worry about a pullback. So our stops could get hit and we could take a loss, and then the darn thing will take off downward again. And we would have already been stopped out and not have a position. But we were right. We just got our stop hit. Right. Now, rule number 2, I have a client in China. And by the way, about 60% of my clients are not on American soil. They're overseas somewhere, which I think is kind of... Is that
right? Wow.
Yeah. I have a client in Asia who worked at this and figured out that footnote rule number 2 adds about 45% to the bottom line. In other words, we do get enough runaway moves in foreign exchange that you really, really should do that. You really should get back in. Yes, you've taken your average true range profit and you're done for the day, but you should go back in and place the next order